Success comes down to choosing the pain of discipline over the ease of capitulation. Thibaut, we only ask you to choose 10 to 15 minutes a day of discipline, and that does take discipline, my friends. Doing it every single day, following these charts, doing your practice trades, filling out your daily market, weekly market worksheets, your trade worksheets, doing the work. If you want to accelerate your training, that's how you do it. And what's it worth? Can you imagine having the ability to read stock charts, to accurately be able to follow trends? It's beautiful. It's beautiful to watch. Now, when we jump into these markets, what in the world is going on? We see the S&P 500 up 1.5%. It was getting ready to roll over going down, wasn't it? And what about the Qs, the NASDAQ 100 up 2.29%? How is that? It's impossible. We have the coronavirus in China. Half of the world is shut down. What's going on? How can the markets be soaring? And look at TLT. It's down 1.35%. And gold ought to be going up. If the world is going into some kind of potential pandemic crisis, and we see companies like Apple closing their stores and businesses over in China bringing the Americans home, what is happening? My friends, this is a great lesson that the market is going to do what the market is going to do. If you listen to the news and try to trade off what you're hearing on the airwaves, the market is going to mess with you. Now, is the market going to correct itself if indeed there is something to this? Of course it will. But in the meantime, what's the market telling us? It typically front loads information. Unless the market's being really manipulated with, so far, we're not seeing the market really very afraid of the coronavirus or things being set up. Well, let's jump into that and explore what we see happening on these charts, because the charts speak the truth to us. The charts tell us what's going on, and our job is to follow the trends. Now, remember, we don't have a crossover going down, or, well, we still have the crossover going up on the S&P 500. We were expecting potentially, and still, it's only Tuesday, my friends. 2 up days so far this week. Could the market roll over at the end of the week and hammer down? Of course it could. Could people be trying to pull profits out of the market at this point? Of course they could. So we're going to watch, pay attention, see what there is to see what there is to learn, and we keep telling you, that's why you go into a trade and you always set your loss limits and you set your profit margins. That's why we use those profit and loss bands time and time again. So let's see what there is to see on these charts. The S&P 500 did not cross over. In fact, it couldn't cross over until the end of the week, but it was trying to show a crossover going down and then pulled back away from it. Isn't that interesting to watch and see? Actually has gone pretty much flat on the weekly price percent oscillator. Derivative oscillator, however, continuing to lose momentum. What do we have now? Instead of a red down candle, we have a green open box spinning top. Indecision tending up. Price is right there on the weekly trend line at this point. We go to the 2-day chart. What does it show us? Still moving down slightly, derivative oscillator gaining downward momentum. We see on our Heiken Ashi candlestick, and again, this is the Heiken Ashi candlestick for Tuesday and Tuesday alone. So it's not a complete candlestick yet. It won't be drawn in full until the close of the market on Wednesday. It's a green open box candle, shows strong up movement, like we set up 1.52%. Price is still below the 2-day trend line, but above that weekly. So we'll keep our eye on things. We don't have a trade because we still have the 2-day chart going down, even with all of this up movement. Now, look at the 4-hour chart. It finally did cross over in the morning, heading up, and a big green up candle, about the same in the afternoon, about the same spot. And again, went green on the derivative oscillator at the end of the day. So the market is in flux. We are waiting to see what's going to happen. We really don't have the likelihood, unless there's some craziness that goes on tomorrow, of this 2-day chart crossing over, going up, giving us a recross. That could happen if there's lots and lots of strong movement by the end of the week. But look at even where things have recovered. Still haven't gone up to where we were in the prior week at the top back on Wednesday the 22nd. So we'll watch, see what there is to see how long this up movement's going to go. Is it going to keep pegging and going up in spite of what may be going on around the world? We'll wait and see. And again, keep in mind, my friends, if you're writing down your notes, put down the market is going to do what the market is going to do. Do we ever talk about trading off of news? No, we don't. Why? Because the market doesn't care about news that you hear from the news media. It cares about its own reality. Its own reality. You can't second guess the market. That's why, my friends, we trend follow. Now we've gone on the weekly to the NASDAQ 100, up big for the day. Big, 2.29%. That price percent oscillator is heading up. Derivative oscillator still losing momentum. Now again, this is 2 days into a weekly candle, so we still got 3/5 of the candle to draw. We don't make any conclusions at this point. We just watch and see what there is to see. Are we going to have a crossover on that 2-day chart going up? We might at the end of the day on Wednesday, so watch for a potential recross there. Of course, one of the problems that you would have there is you see that the derivative oscillator still negative. Doubtful it'll punch over positive. So again, keep your eye on things. If you do, at the close of the market on Wednesday, find a recross, that is, that the blue line is over the red line at the end of the day, you can sure look to jump into a practice trade. Do set your loss parameters for sure. What do we see going on the 4-hour chart? Up in the morning and the afternoon, crossed over going up in the morning. So again, we'll keep our eye on things. Derivative oscillator gaining upward momentum. Price percent oscillator heading up. So we'll wait, watch, and see how this market shakes out when it comes to stocks. Now we go to where we had our weekly vertical crossover. That was back on the 31st, the week ending Friday the 31st of January. Weekly vertical crossover was in effect. What if we had happened as the week started? We have a red open box candle, again meaning a great slow, well, for the movement we've had, a great slowing in the upward momentum of price. But again, red open box candle. We look at the high we reached in the prior week. That high was 145.99. 145.76 is where the high was so far this week, not reaching a higher high. And in fact, that down movement underway. Price percent oscillator is still positive. Derivative oscillator still 2 days in, gaining upward momentum. What about that 2-day chart? Hasn't crossed over going down. It's got a long way to go to crossover going down. We do have a red down candle forming, so we'll keep our eye on that solid red down candle. It's not a big one, but it has pushed through that otherwise beautiful 2-day trend line. We'll have to see how it ends up drawing on Wednesday. Again, your loss parameters are in effect. That's why we always put them in. We see that, of course, down movement in the morning followed by more down movement in the afternoon. 4-hour chart crossed over, going down, and we see that derivative oscillator gaining downward momentum. Alarm bell when we end up with a penetration in that 2-day trend line. Again, 2-day chart hadn't crossed over going down yet, but we do have a penetration in the 4-hour chart on the 2-day. There's all sorts of little warning signs that you can get. But remember, all things being equal, the market tends to move in the direction of the largest chart. We pay attention to both the weekly and the 2-day. Now gold down also 1.30% after the weekly vertical crossover back on the 10th. Of course, we had sluggish movement the week ending the 17th of January. Some okay movement on the week ending the 24th. Decent movement up the week ending the 31st. And now, so far this week, 2 days in, a red spinning top, penetrating the 2-day trend line above the weekly. Price percent oscillator heading down. Derivative oscillator losing downward momentum 2 days into that 5-day candle. And are we going to have a 2-day crossover going down? Wednesday's gonna tell us. Looks like it's heading that way. Derivative oscillator's negative, but again, don't call a candle till the candle's drawn. But we have penetrated the 2-day trend line. 1 day into this 2-day candle sitting right there on the weekly. So pay close attention, my friends, if you are in the gold trade still. And of course, we do see at the end of the day penetrating the start of the day, penetrating the 2-day trend line on that 4-hour chart, ended the day with that weekly chart penetrated. So again, pay attention. We'll continue to watch and see what there is to see, particularly on that 2-day chart, how it ends the day on Wednesday. Will the market make incredible recoveries tomorrow? I don't know. I'm going to watch those charts, pay close attention, let them lead me using, of course, my bands, my profit and loss bands, paying close attention, particularly those loss bands, when it comes to the gold practice trade and the 20-year bond practice trade. So pay attention. Let's see how this week continues to develop. When things are going crazy in the markets, my friends, this is the best time to be practice trading and to learn. This is the key time to learn. Want to know more about what we do? Of course, take the great trainings we have. We have a great training for you today. You will see it in the show notes. It is Pearson's Law applied to your practice trading. You will love that one. If you're not getting our daily emails, how do you do it? You just go sign up for free at chartingwealth.com. Also, if you want to really help us out with our metrics, would you click the red button on the bottom of your screen if you're watching the video and subscribe? We appreciate that. You subscribe there at YouTube. And if you hadn't purchased our book, it is available for purchase. You'll see a link in the show notes, both on the YouTube channel and with the emails we send out, and at the website, chartingwealth.com. Order that book. If you happen to live overseas, guess what you can do? You can send us an email. We'll send you a PayPal invoice. Pay that. We'll get your book right out to you. I got books going out today for all the recent orders. God bless my friends. All the best from the whole team at Charting Wealth World Headquarters.